Good morning, everyone. This is the weekend update for Saturday, January 3rd. We're just going to go over the indice charts really briefly. And really, the main reason is the first couple of weeks, of the new year, I usually don't really care what the indices are doing because we have a lot of other things at play. The tax loss sell pressure that is or has been very evident over the last 3-4 weeks of last year, now gone. So those who wanted to sell, those who had a reason to sell, other than fresh news popping up, have sold. And you're going to start to see a lot of stocks over the next few days move very, very easily without that sell pressure in place, no matter what the market does. Now, interesting day on Friday. This year kind of sucked a little bit. We had, the half days, the holiday, and then back the day after Christmas on a Friday and back the day after New Year's on a Friday. Everyone gets back to work on Monday, and we're going to start to see these January popper plays really start to move. We had the market back and forth on Friday. We had a big gap up. They gave it all the way back, went deeply red, sucked the shorts in it for the umpteenth time, and then rallied into the close. What's next week going to bring? Who knows? The volume's been really, really muted over the last few days, and it's really going to depend on what the market thinks of oil dropping. If we get a bounce back in oil, we could see them move back into stocks, and it depends on what the dollar does as well. But, as far as we're concerned, uptrend support on the Dow is 17,400. If we look at the Dow transports, they were also weak, but closed right above the 50-day moving average. Russell, which is the larger small cap stocks, came back from that push to new all-time highs last week. But, we came back, touched the 20-day. We could see that bounce back nicely. But anyway, let's jump into what is moving. And it was January Popper Day on Friday. Mila. You gotta love it when we send out a buy alert on this stock and it hits our target within a few hours. MELA. We jumped into this one, as I mentioned in the email alert and posted in the chat room when this one's trading $1.26 to $1.30. Low float biotech stock with the classic January popper setup, the slow bleed in the month before January, no real reason, a little bit of a consolidation ahead an event. Reason, they're expecting to get positive data published in some journals in January and February at any time. And really what we've seen happen over the last few days, there was NRX, if I'm getting the symbols right, NRDM, I'm probably getting the symbols wrong, but those big bios, big bio movers, they had a common theme, low floats, and they went up big, and Milo was another perfect example of that. We were looking for a move to the 50-day moving average, which is at 159, and it traded as high as 169. I mean, absolutely perfect scenario. We also had another alert. Now, we jumped into a little bit of this one on Friday, or on the day before on New Year's Eve, and then pressed our position on Friday. I sent out that email alert. Mevis, consummate January popper play. You can go back. I mean, we've been playing this one as long as Buy Sell Short's been around. So what's that? 12, 13 plus years. We've been playing Mevis into the Consumer Electronics Show, which starts next week. This actually is the first year where any sort of move is legit, in my opinion. Usually what Mevis has moved into on CES yearly is rumors of deals with Apple, etc., etc. But this year we go in, and one of the hottest things at CES this year is autos, connected cars, heads-up displays, etc., etc. And a stock that has seen a big move over the last few days on that is Neon, really 250 to 350 over the last 4 days. I mean, a 40% move on this stock. But really, like I said in the email and the research I posted out there, I think Mevis is the sleeper going to CES. Mevis is partnered with Ford Motor Company. Ford is giving the keynote speech at CES when it starts on the 6th of January. They're going to be talking about their heads-up display and a lot of the other connected technologies they have in cars. Mevis has a contract with Ford that they signed in May. you don't think that they're going to be rolling out the heads-up display that they have a $3 million plus contract with Ford on. Given what we saw Neon do, Neon has seen its market cap go up to $140 million. If we saw a similar market cap for Mevis, who actually has a contract with a auto company, we would be looking at $3 to $4 a share on Mevis. So fat close on Friday, very, very strong into the close. I mean, we picked shares up at $1.70 to $1.72. Closed the day at $1.98.96. I mean, we're already up 10% on this puppy. Average gain usually is about 20%, but if we get a juicy press release, that 240 plus, 225, 240 target area is going to get blown out of the water. Closed above the 200-day moving average as well. That's the first close we've seen above the 200-day moving average in about 3 months. So very bullish action on this one on Friday. A couple of other January popper plays I wanted to mention. CERE trades 50% under cash. Breakout. We had a big pop a week ago on very, very high volume up to that 50-day moving average when we first initially jumped into it. That was our first target. Gave it back on reduced volume, has been consolidating over the last couple of days, and then we started to see the buyers move back in with that tax loss sell pressure out of the way. This next break and close above the 50-day at 28 cents, and we're going to be looking at 35 to 40, and then the possibilities of a move to that 200-day moving average. We've got RSI above the 50 level for the first time in, probably 7 or 8 months, which is bullish. We also have a nice little uptick here on stochastic. So this chart looks really, really good going into the next few days. A very, very strong mover. One of my favorite January popper plays that we have for a couple of reasons is OPTT, Ocean Power Technology. This one is trading 50% under its cash value. It was just a stupid, no news sell-off into the end of the year. This is a stock that was trading way, way higher earlier in the year, and you just had a lot of stupid funds throw in the towel at rock bottom. I mean, selling a stock at a 50% discount to cash, madness. But, that madness is our benefit. We had that extreme negative MACD, and you recall when we initially jumped into this one about a week or so ago, this is one of our key indicators when we're looking for a bottomed out play. It's been kind of sideways, actioning, been going between 61 and 65 cents. We finally got that first break above that 65-cent level, and you'll start to see all the Twitterati, all the expert quotation mark newsletters, all those bull market newsletters that have appeared over the last couple of years, who essentially all they do is chase real traders like us higher prices. So this is probably where you're going to see these guys start to rush into this one here. Break of the 20-day, 72 cents. They will quotation find it as we make our way back up to the 50-day, sitting up there at 91 cents, and we'll be sitting on a 50% gain on that move. But the chart looks great, like the setup here, and it's rock and roll time. BSDM, sell pressure gone, but it continues to hop all over the place. As you can see here, the downtrend and the 50-day are at 40 cents. So that is going to be the level that sets this puppy free, and that's going to be the next add point. It was trading at 39 cents on Friday, dipped all the way back to 32.33, where we were able to pick up some shares. Ended up closing around 35 cents. So, this is a stock. It actually gives pretty decent ranges, but that's the level we're going to be looking for. The breakout here is 40 cents, the 50-day moving average. CBLI, another one, big moves, dips, big moves. We had that initial spike last week on the rumor of the nuke plant leak in Ukraine, spiked up to the 50-day. They came out and denied it, came right back down. Last day of the year, we, of course, had tax selling, and then on Friday, we saw some nice consolidation on this one. Target still remains a move up to that 200-day moving average at 48 cents. We're starting to see, if you look around, what typically happens this time of the year is you start to see stocks that couldn't move over the last month or two move very, very easily on low volume, and then they break key levels and the volume starts to pour in. So you need to be paying very, very close attention. A lot of the sell pressure should be gone on these stocks, and you're going to start to see them move very, very easily going forward. I mean, look what our play Mila did on Friday. You know, no tax loss sellers around, and then boom, she goes. I wanted to make a quick mention on Amco. Had that big push last week, got above the 200-day moving average, came back in the last 2 days on low volume, but you know the Chinese stocks are going to get a boost here in the next few days. China is putting another stimulus plan out there. We saw some of the China auto plays move on Friday, and these guys do steel recycling, so I'd be, looking to pick up some shares here on this weakness before they start to rush in, and these cheaper stocks are really starting to move nicely. Not a whole lot of them left, especially ones that are profitable like Amco, so this could be a nice upcoming week for Amco as well. So that's it for the video. Have an awesome weekend, guys, and see you all in the chat room on Monday. Bye.